A very good evening, friends. We welcome you to this webinar on Audit Trail. I'm Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board. And on my behalf and on behalf of my Vice Chairman, CA Vishal Bhai Doshi ji, I welcome you all to this program. I know it is bank audit season, but we were receiving a lot of queries from member to organize a program on Audit Trail. And you'll be happy to note that for this council year, this is the 71st program of the Auditing and Assurance Standard Board in less than 2 months. And friends, those who may not be aware, let me tell you that we have also started a expert panel to answer your queries on bank audits. This is operational from 1st April till 15th April. Please feel free to raise your queries, and we have about 50 experts who are promptly responding to the queries. This is operational, and within 24 hours to 48 hours, we are responding to the queries. Of course, they are the personal views of those experts, and there is no fee that is being charged by the institute. And from 16th April to 30th September, we'll be running an expert panel to answer your queries on statutory audit, whether of the corporate sector or of the non-corporate sector. And we are aware of the magnitude that there are more than 18 lakh entities which will undergo audit during this period. But last year also, we have successfully done it with the help of all the experts. So please feel free to raise your queries thereon. Friends, today, the topic is audit trail, and audit trail has become mandatory for companies in respect of accounting period commencing on or after 1st April 2023. There was a dichotomy in these provisions that the auditors were required to report on audit trail even for 22-23. What happened that this provision came 2 years ago and was deferred by 1 year. So it became 1/4/2022. And then in 1/4/2022, when it was deferred again by 1 year, the amendment for companies went through and it was made 23. But the amendment for audit reports somehow seems to have been skipped and it remained 2022. So we reached out to the Ministry of Corporate Affairs, and Ministry of Corporate Affairs has given us a verbal clearance that since for companies it is not applicable for 22-23, so there is no way that the auditors will be able to report on the same, because the company is not required to maintain audit trail, but there's no point in reporting on it. So accordingly, immediately on receipt of this clarification from NCA, we have issued our technical guide or the implementation guide on this Rule 11G, which is popularly known as audit trail. And friends, I believe that this is a remarkable step, a very forward-looking step, because this will bring in transparency. A trail, as you know, all of us, basically we are going to the source and seeing that is there any changes made. Many friends ask a question that, whether, to err is human. So if there are mistakes, what would happen? So nobody is stopping anyone from making an entry, making a rectification entry. If some error has happened, make a rectification entry. Then there are people who say that, how do we close the books of 31st March on 31st March? Again, no one is expecting we'll close the books of 31st March on 31st March. There will be closing entries, which is fine. What audit trail would require you is to keep a log of the changes or the entries which are being made on a particular date. Suppose you come across some audit closing entries on 4th of May. Obviously, these entries will be passed on 31st March. However, the system will log in that on 4th May, you have passed these entries. So absolutely for bona fide transactions, there is no issue. And what is expected is that your software will enable the management and the auditor to see that who has made the entries, at what point of time the entries have been made, what is the nature of those entries. And basically, we must understand that this is the management responsibility to maintain an audit trail. It is a management responsibility to choose a software which complies with the audit trail requirement. It is the management's responsibility to record, to retain the documentation for the statutory period, which is 1 + 8 year, that is the current year plus 8 more years. An auditor is required to see its compliance. If the management has failed to discharge their obligation, an auditor will simply report on it. If the management is maintaining books of accounts on an annual basis, an auditor will report on this. Beyond that, an auditor is not expected to help management choose which software to help management. Of course, you can always advise management that, which software have an audit trail and otherwise, but this is not your statutory obligation. You are supposed to do the control testing, IT application control, IT general control, and report on that. Some people also, and of course we'll be discussing in detail, say that if accounts are outsourced, what happens? Government is not stopping any business through this audit trail. Government is just saying that if any changes are made, if any entries are modified, we should know about the same. The system should track, should keep a record, should keep a log of the changes which are being made. And as of now, it is applicable to companies. People say whether small companies are also covered. Simply company, whether it's a Section 8 company or a foreign company or a small company or a large company, as of now, it is applicable to all the companies. Going forward, it may become applicable on NLPs. It may become applicable on partnership firm. It may become applicable on sole proprietor, that the government in due course will decide. But to me, this is a step which will be helpful for the chartered accountants, whether auditors or otherwise. And this is a forward-looking step. And personally, I welcome this step. And this implementation guide, which we have issued, contains detailed guidance on the illustrative audit reports also, that if you come across a particular situation, then how should you report? So from our side, we have included many examples. And friends, today we have two very eminent experts. One is our very own president, past president, C. Amarjit Chopra ji, whom I call my mentor and my guru, and who is serving the profession from almost last 5 decades. What service he has done to the profession, all of us are aware. And this background, this red background, we are so used to see since the time of COVID. Whether Chopra ji is overseas, whether it's in Canada, whether it's in Bangalore, whether it's elsewhere, is always available for our profession. And whenever he's in Delhi, this red background, we can see. And this has become associated that with the place that we know that Chopra ji is here. And friends, despite undergoing a knee replacement operation, he is continuing to serve the profession from home, taking all possible measures for the development of the profession. And the profession always remains grateful to him. We also have another very esteemed speaker, C.A. Govind Ahuja from Mumbai. And, Govind has been instrumental for many of the contributing several pieces of technical literature to the institute, whether in the auditing standard board or in the accounting standard board. He's a seasoned practitioner with more than 25 years of post-qualification experience. And, he's also one member whom we can count on at any point of time. Even for this webinar, we approached to him at a very short notice, and he comes with a very clear concepts. So he'll be going through this technical detail by way of a PowerPoint presentation. And the importance of this topic, I can tell you that at the beginning of the program itself, 2,300 members have already joined, and about 70 questions we have already received. We'll try to answer all the questions. And so before that, I'll be inviting both my star speakers, my opening batsmen, you can say, Amarjit Chopra ji and Govind Ahuja for their opening remarks and technical presentation. So I would request to request our Honorable Past President, C. Amarjit Chopra ji, for his initial remark and initial thought process on this topic of audit trail. Thank you, sir, and over to you.
Thank you, Sanjeev ji. Thanks for all your kind words. And of course, my sincere thanks and gratitude to Govind Ahuja ji and Anil D. Lal, for that matter. Govind ji, because I think, as you said earlier in informal chat, it is the second time. In the first COVID times, we had shared with regard to the COVID issues, the forum. You said something about the red part. behind my back. I think red is very important because the kind of challenges which the profession is facing today, these are all red flags, if you ask me. And there cannot be a bigger red flag than the audit trail, very frankly. And you have said certain things. You'll only say, you said that I have been giving a lot to the profession. I say it's the reverse way around. Profession has given me, I think it has given me something which I didn't even deserve, very frankly. The kind of love and affection which I have got from the members, students, it is unimaginable. And one feels emotional about it, one feels sentimental about it. And I can only tell the last with whatever one can do for this profession, one must continue. Days come, you have already said the following, you have set the context. Very frankly, if people, whosoever has conducted forensic audits, I think whosoever has conducted forensic audit, they must be aware that there have been a lot of malpractices, manipulations, additions, deletions, modifications in the accounting entries and the back dates. And it has not done anything good to the profession. It has not done anything good to the business community, for that matter. And I will only like to say one thing to the entire professional community today, particularly the chartered accountants. It is the time to rise to the occasion, support the government on this very, very forward-looking move. And let's stop talking about what will happen. Nothing will happen. Nobody stops you to make the entries. In the current date, you do it. After all, in the banking also, when the interest rates change, I will give only one or two examples with regard thereto. And you do the value dating. It is as good as value dating, basically. You may be raising the interest rates today, but you may be implementing it, say, after 10 days. But you value date it 10 days early. That is what it is. Does anybody say that the banks can't do this value dating? Every bank has been doing it. For ages, they have been doing it. And we have been accepting it. There have been cases where the foreign remittances have been received by the banks. The day it gets crystallized, the day you receive it, on that particular date, whatever is the rate, you just fix that particular rate of whether it is dollar or it is any other currency. And that credit has to be allowed to the party. That credit may be allowed 10 days later. But the value dating will be done on that particular date on which the amount had been received and the rate had been crystallized. I think this audit trail is nothing else, but it is that. What the audit trail tells you, is only that if at all you add, delete, modify any of the entries at any point of time, then there should be an added, and if you do it in the back date, if you are doing it in the current date, there is absolutely no problem. But if you are trying to do it in a back date by modifying your accounts, by deleting it, by adding it, by modifying it, in that case, the edit log should have a record of those entries, the person's name, after all, who has done it, basically. And to my mind, it should even contain the narration with regard thereto. I'm told that certain systems don't provide for the narrations, basically. I think all those systems will have to undergo a change in the times to come. There is no doubt in my mind so far as that part is concerned. Nobody says that you don't do it. Let's be clear about it. I think Sanjeev ji has already said it. Nobody tells you that you can't do it. The government realizes the business difficulties, the business complexities under all circumstances. But the only thing that the government wants from us is, and from the business communities, actually it's a management function which is to be commented upon by the auditors in any case. The government is only expecting that if at all management does something in a right manner, audit log is there, you audit the audit log. You get into those transactions which have been backdated or whether by way of addition, deletion, or by way of modification. And if you find any malpractices, then you just, whatever way it has to be done, and even if you treat in certain cases that it's a fraud, you report it in even under 143.12 and under CARO also for that matter. I think one thing is very important as auditors, as auditing community, if we want to remain credible, if we want to remain relevant for that matter, it is essential that we must support such moves of the government under all circumstances. I think that is where the CARO was revised. I think Sanjeev ji would bear me out. He was a part of that particular group. Why the CARO was revised? Just to tell the government that we are with you. We are with you. We were the people who revised it, basically. Of course, along with the government people sitting in that committee. But we revised it. Was required, and we are questioned statement, debtor statement, creditor statement, whether these are coming from the books of accounts, whether these tally with the books of accounts. Why did we do it? Because we wanted the profession to remain relevant. We wanted to increase the accountability of the business community along with the auditors also, for that matter. You see, one thing I can tell you, all my friends, if at all we want image of the profession to improve, if we want to become relevant, if we want that the profession must go on and more professional opportunities may be created for the profession, we have to be forward looking. We can be advisors to the client, but advisors in the real sense of it. Advisor on the positive note, advisor not on a negative note. When I say negative note, not an advisor to the client as to how he can actually override a particular act, how he can override a particular provision. I can tell you in the informal chats also, we are getting so many queries which are mind-boggling. But those queries, whichever query is positive in nature, where he wants to seek help, what is to be done under these circumstances, one will say, please go ahead with it. I will give few examples also, very frankly. See, I personally feel there are a number of issues which this audit trail will create for that matter. Now, when I talk of this, you see, I think Sanjeev ji must have dealt with in the guidance note also. There will be multiple softwares within the organization. Now, this is one question which is being asked, and I think it's a very valid question. Now, in a particular entity, there could be SAP and there could be something else also running at the same time. We have seen in the various banks, in the same branch, 5 or 6 different system, different softwares running. Now, the question is, if these softwares are not integrated, if these softwares are integrated, if these systems are integrated, then you can do it at one place. You can detect the audit trail at one place. You can audit the audit trail at one place. But if these systems are different, in that case, probably you will have to look at each system, whether that system actually provides for that kind of an audit trail or not. And whether at any point of time, because what is required for the auditor to report is that at no point of time, there could have been deactivation of this audit trail function. Now, to me, the most important angle is how an auditor will be able to detect that if at all it was deactivated at any point of time, what is to be done? We all have been used to tally, very frankly. No disrespect to tally for that matter. But it is not that the tally did not want to bring in this particular feature also. And I think even in earlier cases, wherever it was being customized and wherever the businessman wanted that there should be a audit trail provision, they were providing for it. It's not that they didn't provide for it. No, they have said very clearly that they will provide for it. But Sanjay, one point that I will like to raise, and I will definitely like Mr. Govind Ahuja's reaction a little later is, if now the government has come up for the companies, particularly for the companies, that under no circumstances you can deactivate the audit trail function at any point of time. At any point of time, it cannot be even for 1 minute, for that matter. If you really ask me, of course, the change system log will be able to provide you the detail whether it has been done or it has not been done, or the system management log will be able to provide it whether it has been done or it has not been done. But I say the other way around. If the government has said that it cannot be deactivated under any circumstances, why software producers, particularly in case of the companies, where they provide the software to the companies, may provide for deactivation under any circumstances? I personally think that the government may even bring this particular thing, that no software producer under any circumstances can provide for this. And why only companies? Why only companies? I think good governance, whether it is partnership firm or it's a cooperative society or it is something else, today, after all, the entire clause applies even to the Section 8 companies. We have to report all this even in respect of the Section 8 companies. We have to report it even in respect of the foreign companies, for that matter, whichever are existing in India. Now, if that is the intention of the government, that it is not to be deactivated, then why you want to fix the responsibility of the auditor? I say that you fix the responsibility of the software producer, that you cannot produce a software which has a deactivation mode under any circumstances. I think it should be acceptable to the, now, unless the software people themselves are very clear that they want to collude with the business community. I'm using this word, or they want to be in connivance with the business activity. Because you said, and I also say the same thing, nobody denies you to pass the entry in the backdate. The only thing is that you must have an edit log with regard thereto. Now, if you can do it, where is the problem to the business community, or where is the problem to the software producer? I don't see any reason why it should be that way. Very frankly, I think as an institute, as ICI, you must take a hand. This will give a boost to the image of the profession. Very frankly, if you ask me, it will give a boost to the image of the ICI. That ICI has demanded that software producers should not be able to produce a software wherein the deactivation clause is there or deactivation facility is there. I personally feel it is such a serious matter which we have failed to ignore. If not failed to ignore, which we have ignored rather over a particular period of time. I have certain other questions and I have certain other issues with regard thereto. I say if a person has gone, not only, I'm not looking at it only from the viewpoint of modification or from the viewpoint of the edit log. I'm giving some other flavor also, Sanjeev ji. And I think Govinda Ahuja ji, if you could react on that later on. I may not be there because my knee does not permit me to sit beyond a particular point of time. I will definitely like your reaction on this, and I'll definitely try to find out from the video recording that there could be cases where certain financial entries in the back date are passed. Maybe for purchases, maybe for sales. And I think this has been one of the major issues, very frankly, if you ask me, in the various organizations. Now, if somebody has passed certain financial entries in the back date, what happens to the quantitative part thereof? I think then all other records with regard to quantitative will have to be looked at.
They will also undergo change.
No, those are non-financial records. Those are non-financial records, but these will have to be looked at under all circumstances. Yeah. And if I find, and I'm just saying for the sake of saying, maybe for the sake of saying, I find financial entry to be there, but not an entry commensurate thereto in the quantitative part. But I will talk of the internal financial control systems. Yeah. I think the internal financial control systems fail altogether in those circumstances.
Absolutely.
And then it could be a case which may have to be reported as a fraud.
So sir, we have already dealt with the issue in the implementation guide, looking at the fraud scenarios. That what are the circumstances which warrant for an auditor to assess that whether there could be a fraud?
So my humble submission is that somewhere or the other, we will have to start looking at it, and we'll have to start giving more examples basically in respect thereof. Because I personally find whatever happens, whether uh, for the income tax purposes or some other purposes or GST purposes, whatever way the people want to circumvent some of the acts, it is when the quantitative and financial records don't match on a particular date. Yeah. And I think if these don't match on a particular date, and I will be surprised that a company had actually received the goods on a particular date, and if the financial entry was not passed, I can well agree there too. Okay, it was an error, it was an omission, and you go and then pass a particular entry on that day. And why only on that day? I say you can pass that entry even today to rectify that particular situation. If in quantitative reconciliation you find excess stocks basically, and then you try to find out, you try to link and reconcile why this has happened, and you find that certain stocks were received which were not financially booked on a particular day. After all, financial and quantitative reconciliation must go on together. Now, if that happens, you can pass the entry today. But if a financial entry is passed and the quantitative entry is not passed, or a quantitative entry is passed for certain purposes, I don't want to get into the details thereof, but a financial entry is not passed, then what happens? Because books of accounts, the way these have been defined under Section 213 of the Companies Act, is a much vast, it's a much wider term. It's not only the books of financial records, basically. I think everything which it gets encompassed, which will affect my accounts at a particular point of time, it will be treated as a book of account. Now, one of the questions I think which has been answered also in the guidance note probably, if my financial books are on a daily basis, but my sale register is on a monthly basis, that you can't have. That situation you can't have. You cannot have purchase register on a monthly basis. I think when you are talking of audit trail, it has to be on a daily basis. It's very, very clear that all transactions have to be recorded on a daily basis. Today, if you ask in the banking sector also, the Reserve Bank of India has laid down for the banks to have a daily end run. Yeah. Daily end run. And in the commercial business, we say that you can have monthly registers. How is it possible? I think there, you people had been actually, I can say, balancing the cash in hand at the end of the month. Why at the end of the month? Why not on a daily basis? Are you scared that there could be negative balances on any day? And I can tell you, these entries which are passed in the backdate, these are not only with regard to quantitative, these are with regard to certain other matters also. The auditor will be doing a human service to the society to eliminate this particular menace. And I can tell you that if it is happening, and if the auditors can play a positive role, there's nothing like it. And then I will say that as an auditor, I think it will be my duty to find out whether the software which has been produced, which has been purchased, or which has been installed, is whether it is customized or it is just the mill of the run of the mill, basically. That whatever a particular company had been producing, it has given me also, and it has not been customized. Now, if it has been customized, there could be option with regard to disablement. There could be option with regard to non-disablement also. If there is no option with regard to disablement, then I think I am very, very safe so far as that particular part is concerned. But if there is an option, then I have to be far, far more careful. We all have been taking management representation, and people have been talking in circles basically. And I think Sanjeev may be knowing more than me today. That we'll take a management representation that there is no disablement done at any point of time. This management representation is not going to work. SA 580 is 100% clear, not 99.9% clear. With regard to any management representation, SA 580 is absolutely clear that if you can check it, you have to check the veracity and authenticity of that particular management representation. Now, if a management says, no, we have not disabled on a particular, on any date, Get into the system log. How does it matter? Change log. And if the change log actually provides that hint that it has been changed, it has been tempered, it has been played with. After all, in accounting software, they are using the word tempering, basically. And if somebody gets into the back data and does something, it is nothing but the tempering. It uses the word even that you cannot destroy, you cannot make something unusable, basically, for that matter. And so if somebody does it, somebody eliminates the entry altogether, then that particular entry becomes unusable at the end of it. That particular evidence has been destroyed. I think as an auditor today, my humble request to everyone is, and I personally feel our responsibilities have gone up like anything. Not ours only. I think even the business community's responsibilities have gone up many times. If I look at the SEBI's functioning today, even the regulators' functioning has become very complex. The regulators' function, ICI is actually having that particular field more than anyone else for that matter. So we must be prepared for all these challenges under any circumstances. And we should ignore the management representation. We must test it that at no point of time it has been disabled. And if it is disabled, then why it was disabled? Even if it has been disabled for an hour or for 15 minutes, I think the kind of adverse comment that we require from the auditor is absolutely different. Because that 15 minutes means everything was in darkness. You don't know what has been done in that particular period. What kind of transactions have taken place in that particular period, because it very clearly says that you must have an accounting software which records everything transaction to transaction on a daily basis and on a continuous basis. You cannot have any kind of discontinuance in that. And I think as an auditor have a role to play therein. And Sanjeev has already said one thing, that so far as the auditing is concerned, actually it was considered to be effective 1/4/2022. Because of a lacuna. But now probably the representation has been made and the government has agreed, and then only this guidance note has come. Because you will have to make a comment, because under the Act it is still there. You will have to make a comment that in view of the inapplicability or non-applicability of this particular clause to the companies, we are not in a position to comment therefore.
Sir, we have already given, sir, we have given an illustrative wording to this effect in the implementation guide.
Now, the only problem, Sanjeev, would be everyone will copy that language only.
Sir, for 22, 23, but sir, 22,
nobody
23,
will use his own.
I know.
Nobody will use his own English, because I have gone through a Mao Caro earlier in which on whether any personal expenses have been charged to P&L. The institute had said, except for the, and we must exhibit one thing, that it is my report. And I think differently from what has been written somewhere, and it has not been cut, copy, and pasted somewhere. That request to the entire fraternity that I'm making. And the other thing is that one should say that I have already touched upon non-financial records also. I've touched upon linkages with frauds also. I've touched upon management representations. I've talked of customized software, which I think the guidance note very clearly talks of. It is not only applicable to the standalone financial statements. It is applicable even onto the consolidated financial statements, where you are supposed to report thereon. The one thing that, again, I must say, guidance note very clearly brings out is that wherever there could be certain components in the consolidation which are not companies. In that particular case, you are not supposed to report thereon. Or if certain components are outside India. Now, here I will have a point of, I will not say difference, but a suggestion to be made. Why a foreign auditor cannot comment upon that whether the audit trail was available all through the year? Why he cannot do it? I think he should be asked to comment upon that. I can think of the entities where this is not applicable. But is it not applicable outside India that there should be an audit trail available? To my mind, it is very much applicable there that audit trail should be available. And if it is available and if it is applicable there, why foreign auditors of the foreign entities should not comment thereupon, and why the auditor in India should not be able to take cognizance of that? So that's...
Sir, I think Govind will be able to answer whether overseas this requirement is there or not. Govind, would you like to comment while Chopra sir is there?
Sure. Sir, as far as the foreign companies are concerned, what we have seen with experience that unless there's a requirement by regulation to comment on internal controls, most of the time the auditors take a substantive approach to audit. In fact, if you look at ISA 315, which came last year, they have mandated the including IT controls as a part of the control testing now. Because how can you have a listed company in a European market where there's no ICFR reporting being done on a substantive basis? To that extent, I would say we are far more advanced. I'm taking pride in that because we are far more advanced with a control-based approach. So that's why I believe that outside India, when you go, if an auditor is doing substantive approach, he'll say, I'm not going to test IT systems any which ways.
No, but that is where, Govindji, I personally feel, if you say, will PCOP not be looking at it in US? Whether
I completely agree with you. PCOP is the entire group. Yeah, PCOP is the entire group.
Agree with me?
Yes,
I am
yes.
the consolidating auditor here.
Yes, yes.
Tell as a part of even today send certain templates. These are the things which you should be checking basically to the branch auditors at times. At least I used to do it in certain cases.
Yeah.
No, just very frankly, in my main company, nothing is going wrong. But if in the subsidiary, which is a material subsidiary, basically, if something has gone wrong, it should not be commented upon. I personally feel I should be asking him to do it. That's I leave it to the institute.
I agree with you. Sir, in fact, I agree with you. If you, PCOE mandates that you have to have the same control system across the network, irrespective of jurisdiction. Yeah. I think that is where the whole change is. But I appreciate your completely. I agree with your thinking on that. Yeah.
So I will say that I leave it to the institute how they will like to proceed with it. But I personally feel that it should be very frankly asked for. But yes, if it's a partnership firm, it is not applicable. It's not applicable. Yeah. I can't help it. In the case of the listed company, it is applicable everywhere. I personally feel it cannot be said that it is not applicable. The only thing is in India, which is considered to be backward accounting wise, I can guarantee it that we are far more advanced than any other country so far as accounting is concerned. Our reporting is far more stringent than anywhere else in the world. I can say with pride. Yeah. The kind of questions which have been raised in Caro and the kind of questions which have been raised in the auditors report rules now, basically audit and auditors report rules now and the accounting rules now, I don't think anywhere these kind of rules are there. So one should say with pride that we are Indian chartered accountants and we are Indian auditors and we are doing it. But before I end, I will only like to appeal with folded hands. I can say with folded hands to all my members. Please support this move. And don't try to make it somewhere or the other. Don't advise the clients against it under any circumstances. Because if we do it, it could be considered to be collusion. It could be considered to be connivance. My humble request is, please support the government initiative which brings in tremendous transparency if you ask me, and which will strengthen our hands as auditors. Earlier, certain things could have gone undetected. Now the government says, no, you go ahead and detect it. And if you detect it, please report it. There cannot be a better move than this from the part of the government. And there cannot be a better move than the institute issuing the guidance note. The only one point that I will like to say, I don't know, because it says that you also verify the audit trails in respect of the previous years. No,
sir. No.
Institute, no. The rules don't say it, but if you read your own guidance note, please read it carefully.
Yeah.
Am I supposed to verify the audit trail in respect of the previous years? I may try to find out that whether the proper books of accounts, the books of accounts have not been destroyed for 8 years. It's fine.
Retention.
But Whether the audit trail was maintained, I don't think I as an auditor can do it.
No, sir, this requirement should not be there. If this there in the implementation guide, we will look into it and we will change it.
Please look at it. And my humble submission here is, under no circumstances, I very frankly, if you ask me, as an incoming auditor or as a continuing auditor, I have been actually looking at the books of accounts. Those books of accounts are in system. System has been sealed. The matter ends there. Why should I even be looking at the books of accounts of the earlier years under any circumstances?
Sir, 100% agreed, sir. If this kind of a statement is there, we will make change.
Some of the firms are saying that we have been doing it. I don't know which firm has been doing it, but some of the bigger firms are claiming that we have been doing it. We have been looking at the records of the earlier 8 years also when we go for the audit. I think it is the biggest myth. And it is the biggest false statement that somebody makes, basically. And similarly, if I am not looking at the books of accounts for the earlier years, how can I the audit trail being maintained, the trail also. But I should not be asked to go back in the last 8 years or 4 years or 5 years under any circumstances and verify whether the audit trail existed in those cases or not. This is my humble submission, and I will like to sum up here only on one note: a great move by the government, and let's all support it in right earnest. That's all I will like to say, nothing more than that. Thank you very much, Sanjeevji.
Thank you, sir. Thanks.
Wonderful efforts.
Thank you, sir. And I can just share the 3,855 unique logins are there. I was estimating around 4,000. So
I told you 4,000.
Yes, sir. And sir, I can ensure that if this for previous year, if erroneously this is there in the implementation guide, we'll change it.
Not even give a hint. I say forget about mentioning. It should not even say semblance of hint that it has to be done.
We are very clear.
Because it is not required.
We are very clear in mind. Only retention is required of audit trail, and there is no look back which is required. Very, very clear on this aspect, sir. I've been in a way.
No, even Sanjeev, how will you find out the retention of audit trail in respect of the earlier years?
Sir, we are saying document retention period is 1 + 8 years. That's all.
Document retention. Document retention is the system.
Yes.
System. Because it will not be otherwise. Because we are moving towards a paperless society, basically. So it should be in the system itself.
Absolutely. Obviously.
But I personally feel whether I am the auditor or there is any incoming auditor, it should not. If I have been the auditor, I have seen that in the earlier years. And the retention of the books of accounts or retention of audit trail should be the responsibility of the company, not the auditor. That's the way I look at it. Anyway, I leave it to the institute, the way they want to look at it. Because we should not make the life of the auditor more onerous than what it should be.
We will not.
It is already very onerous, if you ask me. And we should not put in more responsibilities.
So from AASB and from the institute, we will not make it. That is for sure.
Okay.
And that is for sure, sir. And sir, I mean, our implementation guide was ready for 2 months. We are just waiting for this clarification from MC. And so today, even the guidance for the KPI has been included, sir. So we are trying to be very, very proactive in whatever guidance is required for the membership. So thank you very much. Thank you very much for your guidance as ever. And I have received about 160 questions, which I'll take up once, Govind takes up the technical session. And because, many of the queries will be answered and many of the questions
may be repetitive also.
It is, sir. It is. No doubt about it. Of course, the general query is that the company is a small company. How do they comply? Can they make books of accounts on paper? Well,
this I can answer right now.
Yes, sir. Please.
Small or big is not the question. The question is, if a particular company is being audited, I am the auditor. I am supposed to make sure that it has the audit trail. Where is the question of small or big? If you have formed a particular company, you could have remained as a firm. Who stopped you to remain as a firm or remain as a proprietary organization? You have formed a company, so you will have to follow it. Whatever rules are there under the Companies Act, you cannot ignore it under any circumstances. And the other thing that I will like to tell the members is, if at all this cost implication is there, I, as a chartered accountant, should not be bothered about what is their cost implication. FICCI should take it up. CII should take it up. SOCHM should take it up. That companies up to this particular size should not be forced off. This particular audit trail business or accounting software should not be hoisted upon or foisted upon the smaller companies up to a particular size. We as chartered accountants cannot say it under any circumstances. We are there as auditors. It is the companies, the associations of the companies, and the association of the companies are SOCHM, CII, FICCI, PID, Chambers of Commerce. Let them take it up. So please stop using this argument. Every year we have been seen by the Ministry of Finance in a different light, because we go to them that please extend the date of the income tax filing. Why? Who did not come to us for the tax audit in time? It was the client, not we, for that matter. So we should not ask for it. I've been saying it for ages that we should not ask for the extension of time. Let the chambers ask for the extension of time under those circumstances. The penalty is to be levied on them, not on me. And if tomorrow something goes wrong, who is to be levied penalty upon? Whose certificate is in danger if backdate entries have been passed which remain undetected? It is me. I am facing that particular risk. So why should I face that particular risk? Let them face it. The industry face it.
So probably, two more questions. I know you can answer all questions, but before you leave, if the companies are part-time accountants, then what do we do?
Because part-time, this is for the company to determine whether they want a part-time accountant or full-time accountant, but the software is full-time now. Software is full-time. Software runs full-time. Software is not part-time. If the accounts are on a system, the system has to run full-time. The part-time accountant that you have to hire, he must be qualified. Enough. When I say qualified, need not necessarily be a chartered accountant, but he can operate the IT systems today.
And sir, one more question. I know that you may be annoyed on this. Not
annoyed. I feel disappointed sometimes.
Yeah. Yes, sir. I mean, if imprest is used, if the employee can settle the imprest on a yearly basis, then whether
if I am the advisor and telling them that you give them the imprest and the expenses can be booked at the end of the year, what happens to the quarterly financial results if I am a listed entity in those cases? Am I not camouflaging that? And why the entry should come only in June? I think years. And the MIS system of the company, even I can tell you, a person in Chandni Chowk must be getting the statement of his expenses on a daily basis. Otherwise, he does not know how much is he earning or how much he is not earning. And I say that it should be done on a yearly basis or on a quarterly basis or half-yearly basis. I think we must stop all these arguments. Let's not get into the problem with the government under any circumstances. And if the company is doing it, let's report it, whichever way we have to report it.
Absolutely. Yeah. Absolutely, sir. So thank you very much, sir. With this, I now invite C. Govind Ahuja for his technical presentation, and then I'll take up rest of the question. Thank you, Govind, for joining, and over to you.
Sure. Thanks, Govindji.
Thank you. Sir, before we sign off, it's really been a privilege to share the dais with you or follow you in your discussion. It's really a privilege for me. And I would thank Sanjeev to give me this opportunity. And Sanjeev, again, is a veteran in this business. So it's really nice to have both of you with me on this dais. Thank you very much for this opportunity. So I think I would like to kind of take a few cues from Chopraji in terms of, the theme. Theme, as Chopraji said, is that we have to do our duty. Why? It's a question of building trust or conveying that trust. And, trust is coming from our assurance. Now, when I look at assurance, we always feel it's order responsibility, but assurance is not only order responsibility. If you look at the ecosystem of any corporate world today, you have the regulator, you have the corporates, and then you have the auditors. These all three have to work together to be able to improve transparency, to be able to improve the trust which people can pose on a set of financial statements. And we have very good examples from recent past. A Schedule 3 followed by CARO 2020. Books of accounts should be maintained on a daily basis and the backup should be maintained on a daily basis, followed by auditor reporting thereon. And now if you look at audit trail, it's a complete responsibility to have a system with audit trail and then auditor reporting thereon. So I think the regulators have taken a very progressive approach to say that let's have the ecosystem where the corporates comply and the auditors report. So I feel that to be a very, I would say, constructive approach to augmenting transparency, building transparency. And, this particular move is pretty much a positive move. But, and it'll be important to see how we can implement this. And that's where I like to spend the next 30 to 45 minutes to kind of walk you through what the ICA guide says. Now, guide is available to all the members on this webcast or to others. But I'll try and share with you the intricacies on application. That will be my thought process, because when this was being put together, we have discussed a lot with Sanjeev and with the group who was putting it together to see the practical challenges. So my endeavor would be to just share with you some perspective around that, and then we can take the questions. Yeah. So I'll just share my screen, Sanjeev.
Yeah, please.
And request you just let me know if you can see
my screen. We can see your screen. You can make it full screen.
Yeah.
So it's not full screen as of now. Yes, now it is full screen. Please go ahead.
Yeah. So this again will cover what corporates and auditors need to focus on in this meeting. What we'll cover through this is the introduction and key changes, the key requirements under the Companies Act, because this is important, applicable to the corporates. What are the key management and board considerations? We've discussed with Sanjeev's opening and Chupraji also that this is the company's responsibility. The company has to comply with this, and then we come in for our reporting. So we'll cover that at the beginning and then go into key auditor considerations. We'll also share with you the interplay between the management requirements and the auditor's requirements. And again, the guidance has illustrative reporting. So we just reproduce that in this discussion, but again, it's there for all of you to read in terms of what the reporting requirements is. And towards the end, I've put together next steps for companies and auditors, just practical tips as to how we can achieve this reporting. And this requires a fair bit of interaction and interplay between the companies and the auditors. So that will be my overall coverage for this presentation today. So audit trail, what has changed? So if I look at the concept of audit trail, every system, be it SAP, Oracle, for that matter, even Tally and JD Edwards, these IT systems have a process of logging who has entered the entries in a system. So there's a user who's identified. There's a level which is also identified at times. There's a date time stamp to that entry. So maintaining audit trails is a very integral part of any complex IT system. So it exists today. It's been existing for many, many years. Like, the example which you see, say, in a bill of material application or a payroll application. So you'll have audit trails to understand how that material movement actually happened by looking at the receipt of the material, the booking of the entry, the processing of the AP. But you can see that all through the system and the appropriate date stamp. Now, in this case, we also have certain regulations, like, for example, the good manufacturing practices requirements for pharma sector. They require audit trail for certain data. So again, it's not a new concept, generally speaking. However, if I look at the overall impact on the corporates, and I'm saying corporates because they are the responsible folks to ensure this requirement gets done, is that from April 1, 2023, each and every company, irrespective of size and complexity, would need an audit trail to be maintained through the year. Now, this is a very important change which is coming through, and I'll walk you through the nuances on this in the following slides. The IT systems may differ. There could be a complex system for products. There could be complex systems for accounts payable, for payroll, for taxes. But, the companies which earlier had a choice of deciding the IT systems would also have to decide the data which they need to for audit trail for. So the decision-making on the software to be chosen will remain with the company. And as we discussed in the beginning, we have the prerogative to provide the guidance to our clients or to the companies, but we should not influence in any particular system as such. Coming to the requirements of the Companies Act, and this is where we pivot into the legal requirement and the regulatory requirement. So if you look at the left-hand side, this is the matter which is important for companies. Maintenance of electronic records by companies, Rule 3 of Companies Accounting Rules 2014. From FY financial year beginning April 1, 2023, a company which uses accounting software for maintaining its books of accounts should use only such accounting software which has feature for recording audit trail of each and every transaction, creating an edit log. So every log which you make, every change you make to the audit trail has to be kind of captured in that particular trail, and ensuring that the audit trail cannot be disabled. I think Chopra ji gave a very good suggestion to say that can we not have the system developers or the software developers disable this? And that's a good feedback which we can take back to our corporates and also to the software developers to see if this can happen. So this is the company responsibility. Coming to the auditor responsibility, the auditor responsibility has been now included in the auditor's report, Rule 11G of the company's auditors and auditors rules for 2014. From the financial year beginning April 2022, now we will discuss this nuance a little later, but I'll focus on what the changes are. Auditor's report is required to state whether the company has used such accounting software for maintaining books of accounts, which has feature of recording audit trail, edit log facility as discussed in point number 1 and 2 over here. Same has operated through the year for all transactions recorded in the software. Again, that covers the first aspect on the left-hand side. Audit trail feature has not been tampered with. Now, this is actually coming as an auditor responsibility. Now, this is not something which is covered on the left-hand side in the company responsibility. And last but not the least, the audit trail has been preserved by the company as per the statutory requirements for record retention. The focus is on record retention and not on testing in the prior years. And we'll throw some light on this as we go through the presentation. As you would note, left-hand side is for the company, where they have requested for these 3 aspects, but auditor has to cover these 4 aspects. So management responsibility and auditor responsibility requirements are not entirely similar for this reporting. Coming to the ICI implementation guide, I think it's a very good work product. It defines the requirements for the management and the auditors to apply prospectively from April 23. Applies to all the companies under 2013 Act, including Section 8 company or foreign company. And it is relevant for consolidated financial statements, which for components outside India are not covered as we discussed a few minutes back. What are the key definitions from the implementation guide? This is very, very important for all of you to understand what are the key principles which drive the entire implementation guide. First is the audit trail. Audit trail is defined as a visible trail of evidence enabling one to trace information contained in the statements or reports back to the original input source. Simply speaking, the audit trail should give the history of the entire transaction along with the various people who have made changes to that particular transaction trail. Audit trails are chronological record of the changes that have been made to the data. Any change to data, including creating new data, updating or deleting data, that must be recorded. So as I said, it's a history of the particular transaction from initiation or inception to the closure of the transaction to the booking. What is accounting software? I think this is a very important area again, because this area, there could be various practical issues which will come out. Accounting software is a computer system or programmer system that enables recording, maintenance, and reporting of books of accounts and relevant ecosystem applicable to business requirements. Simply put, there's an aspect of understanding of the company's systems and also seeing what all could be covered in this definition of accounting software. It covers recording, maintenance, and reporting. The functionality of the accounting software differs from product to product, as we understand that even different ERPs have different capabilities, and not all ERPs will have all the capabilities. Many companies use satellite systems. So, many organizations today use multiple accounting software for accounting. For example, you could have a separate system for revenue, separate for payroll, you may have separate for consolidation, you may have separate for even reporting like a Hyperion. So accounting software, it varies from company to company and it varies from ERP to ERP. Books of accounts. Books of accounts of the section 213 of the Act includes records maintained in respect of all sums of money received and expended by the company, all sales and purchases, assets and liabilities, and items of cost, which is the cost record that you normally have. So this has always been there as a requirement. So these are very key definitions. And I said accounting software is one of the key important aspects which will drive our reporting responsibility. And there are some nuances around what constitutes accounting software, for which I have a few examples as we go through this presentation. What constitutes books of account? I think we spoke about the 2013 Act. It's a very broad definition, which includes every record maintained in respect of financial statements. We also comment on books of accounts and books of accounts examined in our tax audit reports. So it practically includes not only the books of accounts as a general ledger, it includes the subsidiary ledgers, it includes the various documentation which are used to input data into these ledgers. It also includes the challans, the tax statements, the annual returns, all of that constitute books of accounts. So any software that maintains records or transactions that fall under the definition of books of accounts will be considered as accounting software for maintenance of audit trail. The records of audit trail are applicable to the extent the company maintains its records in electronic mode. So in case the company is not using accounting software in electronic mode, but they're preparing the entire accounts manually. To the extent they're preparing the accounts manually, that will not constitute books of accounts which require audit trail. And again, there's an exception to that as you go through the examples. This point in yellow, which I have highlighted, is an important change which is applicable for the year March 2023. Amendments were made to Rule 3 regarding access to books of accounts and daily backup in a physical server located in India. So, as you all know, that the management is required to have books of accounts which are accessible at all times. If the books of accounts are stored on a cloud or a server outside of India, then the company needs to have a backup of the server in India. And we also need the company also needs to have a backup on a daily basis. These three are the incremental reporting requirements for March 2023. Here, I would like to pause and share with you how our reporting has changed in the last for 23 and possibly for 24. If I look at the reporting requirement on Auditor, I'll just go back one slide over here. If you look at the requirement of the company's auditor rules, an auditor is required to comment that the system audit trail has operated through the year for all transactions recorded in the software. So we are required to comment on the operation of this particular system for the entire year. Likewise, if I come to the books of accounts, the company is required to have a system which has a daily backup, and we have to report on this. So effectively, whether it's maintaining books of accounts or whether it's looking at the audit trail, this is the first time an auditor is required to comment on the transactions for the entire year. If I compare that to what we did in ICFR, in ICFR, we do understand that we are looking at internal controls of financial reporting, but typically, as per the guidance note, the requirements of ICFR tested generally to say that was the internal control over financial reporting operating towards the year end. So there could be a situation where the company may have controls which are not in place for part of the year, but they were implemented only during the year. So ICFR guidance note requires us to give a unmodified or a clean opinion, even if the controls are put in place during the year and they were operating at the end of the year. If I compare that requirement of ICFR reporting to the requirement of maintaining books of accounts or maintaining audit trail, we as auditors have a very onerous responsibility to be able to comment on the operation of these two aspects of books of accounts and audit trail to be maintained through the entire year. So I think this is something which is an important change. And I like to kind of just amplify that because this will also require a different approach to testing this area. Coming to common situations and examples, and again, these examples are also coming from the ICAI guide. And this is something which can be built upon based on what questions Q&A we get today and based on further interactions. So the examples from the ICAI guide says the company has a standalone software for raising sales invoices and recording sales. On a monthly basis, a consolidated entry is posted into the general ledger of the company. Now, in this case, the sales system could be a satellite system and the general ledger could be, say, in SAP. Now, what happens is that the company would generate the entire spool from the sales ledger and they would record one consolidated entry into the general ledger for the revenue and the debtors and possibly the GST. So when the company is recording one entry into the general ledger on a monthly basis, that means that at least the system which is there, the general ledger of the company, say SAP or the ERP, would have that trail of the entry being booked. However, since books of accounts includes satellite systems, the sales software also would require a specific audit trail to be available, to be able to understand initiation of the sales to the booking of the sales, that trail to be available. So when you're looking at a sales software which is not integrated with the ERP, even that system, that software will require to have an audit trail feature, since this will all fall in the definition of books of accounts under the 2013 Act. Very simple example, but I think very important because many companies believe that if they have an ERP, they're already in compliance. But it's also important to understand what other systems are there in the company's ecosystem to come together the data into the ERP. Second example, again, which is discussed in the guide is about the outsourcing. So the companies outsource payroll and account payable. This is quite common, right? Where many companies, they outsource non-core processes or even data processing for accounts payable or payroll or many other functions. So the service provider is required to have appropriate controls for maintenance of audit trail. So even though this system is, the fund processes are outsourced, the company is required to ensure that the service provider has a system which can have audit trail. And this will also have to be kind of covered in our reporting as it relates to at the end of the reporting for the company's compliance on audit trail. Last, I think we spoke about this example in the earlier slide. Company X maintains its entire books of accounts on an annual basis. Then the requirement of maintaining audit trail is not applicable. This, in my view, would be applicable to smaller companies where they don't have any software being used, or either the software is available, the software is being more used on an annual basis. So then in that case, you could probably take a view that the maintaining audit trail is not applicable. And in this case, this fact will have to be reported in the report that the company's systems, company doesn't have accounting software, which is maintained on an electronic basis. But these are examples which are coming through. As I mentioned, as we progress and look at more and more clients, we'll see probably more issues coming up on different software which have to be subject to audit and discussion. So with this, I'll probably just go into the key implementation challenges. So for one of the key challenges we see in this is a difficulty in amending the accounting software maintained at group level. So many times, if you are a subsidiary of a multinational company, generally the subsidiary in India would have a system which is common to the parent outside of India. So in case the system which the parent uses outside India has a system of audit trail, but not to the definition which is required under the books of accounts under the Companies Act, then there could be a difficulty in amending the accounting software maintained at the group level. In this case, when we see working with some of these multinational subsidiaries, we see subsidiaries have to reach out to their parent company and make a request to them of the system changes required for the audit trail. But as I mentioned that, most of the ERPs have this facility, but one has to also go and challenge again the books of accounts definition to see that all systems are getting covered in this definition. This is another very, very important point on information maintaining MS Excel, Microsoft Excel. So as we all see, and this is actually applicable to 90% or probably 95% plus of the companies we have. Everybody may have, most companies may have fantastic systems, be it the ERP, be it subsystems, maybe integrated ERPs and all of that. However, we see that each and every company uses Excel extensively when it comes to their financial reporting or bookkeeping. So there could be a processing happening in Excel, but data may get pushed in one general ledger as a data entry. There could be a trial balance which may come out from SAP or Oracle, and the company may make the entire financial statements in Excel. And then they may record some consolidation entries out there. There could be a consolidation spreadsheet where companies may consolidate the parent company and the subsidiaries in an Excel sheet. All of these are, by the definition of books of accounts under an accounting software. Now, question is that in Microsoft Excel, generally, based on our experience and based on what we've seen, it's always the last user who has made the change. Their date timestamp gets left behind as to who did the last edit with the name and with the time and date. This particular changes in Excel are not constituted, there's no trail available for that. So suppose if there's a maker of the consolidated accounts, he downloads the trial balances, does the consolidation, books the consolidated entries, and prepares the financial statements. Now, the preparer does that, then it goes to the reviewer, and the reviewer does a review adjustment. And he says, is a reclassification, for example, the preparer's name will go away because there's no audit trail available for this kind of a change. So this is a very important area which will be a practical challenge for most of the companies and most of us. And this can extend to even deferred tax or current tax computations or even the fixed asset register for that matter. So we have to, when you're defining accounting software which needs to be covered in audit trail, you have to start defining the boundary which will be there in our reporting. And MS Excel and some of the softwares are also called as end user softwares. These typically softwares also are at times just a facilitation to complete the process and not really books of accounts. So one should define that very, very carefully, because if Excel is covered under the definition of accounting software, then audit trail is required. And if audit trail is not available, then there will be a reporting requirement. So again, this is a practical challenge which is there. And again, this is something which is, as I said, is a new concept, and we will work back and see how best we can address this point on MS Excel. Definition of change for audit log. I think we need to have a clear definition of what would be considered a change while recording the audit logs. I think Chopra spoke about this. It's the companies who have to comply with this requirement. We are only doing reporting. So there will be an investment required if the company wants to have a system which has appropriate audit trail. Not necessarily has to be a very big ticket ERP. Even newer ERPs today, Indian and international ERPs, foreign ERPs, they are very good systems, not very expensive, but they do come at a cost of license. They do come at a cost of bandwidth, and they could also have a cost of retention and maintaining them audit trail for 8 years. So I think the companies have to invest in that. And for smaller and medium-sized businesses, as we discussed this point, there could be businesses very limited number of transactions, but generating and maintaining this audit log over 8 years implies a huge quantum of generated data. So saving that data, ensuring that it's available for 8 years, I think that's going to be a very big investment for the corporates. So this is some of the implementation challenges we have. Now, probably coming back to the specifics on the management responsibility. I think Sanjeev ji started off the session by saying that we have to appreciate that this is a management responsibility. Just as we say, preparation of financial statements is management responsibility, preparation of books of accounts is management responsibility. Having an audit trail in your accounting software is management responsibility. So it goes with that same philosophy. So management and the board of directors are primarily responsible for selection of the appropriate accounting software for compliance with applicable laws and regulations. Accounting software may be hosted and maintained in India, outside India. We spoke about that. It may be on the premise, on the cloud, or subscribed to as a software as a service. The books of accounts can also be maintained as a service organization. Many times, as I mentioned, there will be outsourcing happening, be it payroll processing or be it accounts payable, with a shared service provider. And the shared service center may use its own accounting software. So many companies would probably give their payroll to, say, Accenture or Capgemini. And those organizations may have their own software to process the data. So that will also get covered in the accounting software definition. So the key consideration for management is to identify records and transactions that constitute books of accounts, which includes MS Excel. Any software used to maintain record transactions that fall under books of accounts is covered. So if you have a web portal, for example, many companies have web portals for user interface. For example, if I have to log a leave in the payroll system, I can use a web portal as an employee of the firm. Even that will constitute books of accounts if there's a financial impact coming through. There could be databases. There could be cloud infrastructure. So anything which is used for processing and storing of data for creation and maintenance of books of accounts is covered in this software. Each software has to have an audit trail feature. We discussed that. And this is a very important point because as a reporting accountant, as auditors, we are required to see that the audit trail captures changes to each and every transaction. When changes were made, date timestamp, who made the changes, basically the person who is to be identified with the name of the individual as well as the designation if possible, and what data was changed. So it can't be a situation where you have an audit trail which captures when the changes were made and who made the changes, but what data was changed may not be available. That is not possible. And I think Chopra ji touched upon this point that you need to have appropriate narrations now to explain what data was changed. It will require management to also rethink how they look at their data capture going forward. Coming to the other constraints for management, they have to ensure that the audit trail is appropriately protected from any modification. As I touched upon on the very first slide, we are required to ensure that the company has appropriate systems and controls that the data has not been tampered with. This will require that the company has an appropriate protection from any modification. We can't have any tampering happening on that data. And what you're looking at these bullet points over here, these are all the aspects which are more technical in nature, but this is something that the company has to ensure compliance with. This is an area where there will be expert help required. So we need to also think through how will we meet this requirement of audit. But more importantly, what requirement the company has to do that. So the company needs to have controls over maintenance and monitoring audit trail. And in this case, this internal controls, which are important IT controls for the company, will include controls to ensure that audit trail feature has not been disabled or deactivated. Controls to ensure user IDs are assigned to each individual. As I mentioned to you, we have to identify who made the change, and the user IDs are not shared. This is one area we see lots of challenges when people, when you have companies where there are a lot of employees coming in and a lot of employees going out, a lot of churn. So there has to be appropriate checks and balances to ensure that user IDs are created at the right time and user IDs are also deactivated at the right time. We also are seeing at times that the companies in certain groups and certain functions, user IDs are shared. There has to be appropriate policies to ensure that user IDs are not shared, and there should be appropriate behavioral checks which the company should have on this particular aspect. Because you can understand the risk, right? If a person A in the finance team uses a person B's ID to record an entry, in the system it will appear that the person B did the entry. But if there's anything wrong in that entry, be it a fraud or be it an internal control lapse, only person B will be responsible. So user IDs have to be preserved and ensure that users don't give their IDs to others. The company needs to have controls to ensure that changes to the configuration of the audit trail are authorized. So this is again to do with the backend, how the systems capture the trail. Any changes to the backend which impacts audit trail should have appropriate authorization. And logs of such changes are maintained. So I think audit trail also includes not the transaction level changes, but also changes to the systems. There should be appropriate audit trail for the change in systems as well. Restricting access to administrators and monitoring changes to configurations that may impact the audit trail. I think this is quite common in every company, whether it's small or large. You always have administrator who will be responsible for the IT system. But it's also important that the administrator has appropriate safeguards on the use of the administrator rights. So be it the administrator ID being created, the administrator passwords, they have to be preserved and they should be not commonly available, because this can very much derail the entire software of a company if the admin rights are known to many. The company needs to have controls to ensure that access to the audit trail and backups is disabled. I think this is again, we spoke about that in the earlier one. I think if the company, if the software developer makes a change that which prohibits that, then the company's job is done. And last but not the least, controls to ensure that periodic backups of the audit trails are taken. So I think with the books of accounts now being maintained on a daily basis, this should ideally get addressed. But it's also important to understand that books of accounts is one concept. But audit trail means that books of accounts would have a lot of data. A lot of data would have each will have several transactions. Each transaction will have various audit trails. So periodic backups of audit trail will also require a lot of server capacity. It will require investments into how does that data, each date time stamp for each change, for each transaction gets maintained for a period of 9 years, 1 + 8. And we spoke about the 8-year period. So I think this is what is for management. I'll just quickly touch upon the board, because at the end of the day, we have to also appreciate the fact that this aspect is an aspect of corporate law. Corporate law is a responsibility of those charged with governance and of the management. So the board of directors have a very important role to play. Board have to take on record the policies and procedures laid down by management for assertion and conclusion on the adequacy of audit trails. And if there are any deficiencies, significant deficiencies and material weaknesses, whether identified by management, by internal auditors, or by the statutory auditor, these have to be addressed by the board. Now, there could be some levels which could be set up. For example, many boards say that don't get us each and every deficiency, get us only a significant deficiency or a material weakness. So there could be a filtration for that. However, the company needs to have appropriate process that each and every deficiency, significant deficiency or material weakness has been appropriately addressed by the management. And for significant deficiencies and the material weaknesses, the board also has ensured that they've been addressed. So this puts the responsibility back to the management and the board. So this is what is the company responsibility. I'll now change the gears, and I think I'll probably now move to the key considerations for auditors. So the key concerns for auditors, I think while what you see on these slides is very much there in the ICAI guide, but I'll touch upon the key important elements, and I'll then try and see if I can cover leave some time for the question and answers. So I think we spoke about the software that maintains records will fall in the definition of books of accounts, and I also spoke to you about ICFR, right? Unlike ICFR, auditors are required to report that the trail feature is operated through the entire year. So I think this is something which is a new concept for us. I think this aspect of audit trail audit will require specialist IT skills. So while we are very good at auditing judgments, auditing transactions, auditing accounting, but doing IT audit skills are different, and we have to now see how best to have a team which addresses the issue. So why the key considerations for auditors would be to, when you're looking at the accounting software, to understand the software configuration that controls the enables audit trail. Also see who has the access to configurations. So when you look at IT audits, and we've been doing this now for at least I would say 10 plus years. When you look at IT audits has got two specific elements to it. One is the element of IT general controls, which talk about changes to programs or user access. And then there's transaction processing. That does the balance sheet tally? Is there a debit equal to credit? So those are application controls. So these two aspects of IT GC and IT app controls are core to any IT audit. So access to configurations is pretty much part of IT GCs, IT general controls. So today also when we do the IT audit, we check who has access to the configurations. And we also see what changes are there to the configuration. So while audit trail is a new concept, these principles have been in place for many corporates. And that's why if you're using an ERP or if you're using a system, even as a satellite system, these are tests which have been done for many, many years. So companies understand this, but I think it's important that the auditor also now understands this concept of ITGC and app and addresses this issue. Important point coming out through the guidance, ICI guidance note is also on the date. So while the changes to the audit trail configuration are to be seen during the financial year, the auditor is also required to do appropriate procedures to see if there are any changes from the date of the financial statements, but before the date of auditor's report. So as a part of subsequent events, there should be appropriate inquiries, and if required, an appropriate audit procedure to see if there were changes made after the date of financial statements, but before the signing of the auditor's report. I think periodic review mechanism is implemented by and operated by management. These are again mirroring the management controls. So the company has a system of tracking changes to audit trail. Auditors should be able to test that. Completeness and accuracy of audit trail or edit logs that are generated with the software functionalities. So I think this is again very much an aspect of looking at the app controls to say that every debit is equal to credit. So if there is a data being captured, the auditor should ensure that the completeness and accuracy of the data is maintained. And in that process, the accuracy of audit trail also is available, which captures the user ID that made the change, date and time, and what fields were changed. I think we spoke about this in the earlier slide. We are looking at this from an audit perspective. So we have to always keep in mind that our testing will not be 100%. It will always be on a test basis itself. And that's very, very critical because many times people feel that, oh, are we looking at the entire year's transactions? Yes, we are looking at the entire year's transactions, but we are just picking up a sample from the entire year's population and testing it. So it may appear to be onerous when you see that, but in testing, it will be still a sample test for the entire year. Any testing by management that's performed to assess the completeness, we should test that controls as well. Coming to the other considerations, and I'll probably move through this quickly. I think assess the management's identification of records where auditors need to be captured. I think we have to be comfortable that the company has appropriate checks and balances to see if all accounting software were covered and all audit trail is covered for all the identified software. Also inquire with management on how they evaluate the changes which are required for maintenance of audit trail. So I think these are part of the annual audit plans where you make an inquiry with management how they did the changes to audit trail. I spoke about the specialists. As I mentioned to you, this area is very, very specialized. So I think having appropriate skills will be important. Policies we spoke about. I think this aspect of retention, I think we have to make appropriate inquiries with management to understand the procedures implemented by the company to preserve the records. And this, as I said, is for a period of 1 + 8 years. Now, over here, the guide says that the auditor may review on a sample basis the audit trail record maintained by management for each year. However, if the auditor has done the audit for this period and he moves to year 2, then year 1 has already been tested when the auditor had issued an opinion for the year 1. So in that process, there could be appropriate, I would say, inquiries could be made, and you don't have to go and test the controls all over again because you already issued an opinion for that period. So I think there will be some judgment required as to how the auditor will go and test the data for the earlier periods, but it's nowhere envisaged that we are auditing that year now to be able to issue opinion for this period. That's not envisaged in the guidance note. Consider the report from the service providers. So the company has outsourced payroll processing or any other transaction processing. Obtain a SOC 2 report or a SA 342 report for the audit trail requirements. Coming to the audit documentation, very, very critical. As we have seen in all our recent inspections, be it the peer review board, QRB, if you look at NFRA, or if you look at, for that matter, even when you are subject to any foreign inspection, audit documentation is fundamental. So whether it's testing audit trail, books of accounts, or ICFR, there has to be appropriate documentation to support work done audit trail. So this has to be, there should be appropriate documentation to support sufficient and appropriate record of auditors reporting and evidence that the auditors planned and performed in accordance with the implementation guide. This is a point Chopraji brought about. I'd like to repeat that. We can't rely on a representation only. The guidance, ICI guidance, has a fantastic, very comprehensive list of representations. My request to all of you is that don't take that as a starting point. That is the ending point. That is a way to cover our risks which are not addressed in our, because we do only sample testing, right? So please have appropriate evidence on your file that you've done this procedure and not only rely on a management representation. And yes, SA 230 on our documentation gives you the guidance on what should be documented. Coming to management representations, this is all there in the ICI guidance notes, so I will not take time. But it's important for you to know that this is something which puts the responsibility back on management. We need to have appropriate documentation on our files that we've tested this, even if it's a sample of controls. So this is something which is there in the ICI guidance notes. I'll not take time because I have to touch upon two important points. And I'll come on to that in the following slide. Coming to the interplay between management responsibility and auditor's responsibility. So if you look at it, management responsibility, we've seen that the requirement to having accounting software having feature audit trail, evidenced by the fact that accounting software could be capable of creating audit log for each change made. The audit responsibility is to look at all transactions recorded in the software. Over here, there's an example which is clarified again in the guide. Our onus on reporting is only on financial transactions and not on every change made. So if the company is adding users, removing users, for example, that will not be covered in our reporting scope. But this will certainly get covered in the IT general controls. As far as recording of a journal entry is concerned or recording on a financial transaction is concerned, that will certainly get covered in the auditor's report. So auditors are expected to check audit trail for transactions resulting change to books of accounts and not necessarily each and every change. Coming to the two important aspects, fraud. I think Chopraji spoke about this, that, the main element which we see is that if you see any audit trail being tampered with in your testing, the first red flag is this error or is it a fraud? And depending on the company's control environment, you could also see that probably it's a slip in a control, but it also could be a fraud if it's deliberate. So I think one has to understand that if there's a slip in the audit trail, is it a fraud or not? And over here, the auditor should consider two factors. Likelihood that the deficiency would result in a material misstatement, because if there's a small slip not impacting materially, then it will not be such a big issue. But if the magnitude is significant, then there could be an issue with that change. This will also require the auditor to look at the risk assessment, risk of material misstatement due to fraud, and you have to look at qualitative and quantitative factors in assessing the deficiency. and whether it really leads to a material weakness or not. I think Chopraji spoke about this. We have to see that if we see any issues with the maintenance of audit trail, and that could have a situation where it could lead to a significant amount of misstatement, we have to evaluate 143.12 to see if we have any reporting responsibility to central government. So I think this is a very important element coming out from the audit trail. And again, we have to also look at the spirit, right? The spirit is that as auditors, we are doing our duty to highlight the issues as we see them. And the second element, which is to do with ICFR reporting, I think while there could be situations where there could be no fraud, but clearly when the audit trail is not available, it does raise a question: is the company's internal control appropriate? And as I mentioned to you, ICFR fixed at year end is still okay, but ICFR audit trail is not okay. The audit has to be maintained for the entire period. So it's important that when you're looking at any exception coming, do consider your impact on the ICFR reporting as well. I think there is a language given in the ICA guidance, so I'll not take time on this, but it's important that you also look at exception on audit trail vis-a-vis fraud and ICFR, and then you look at the ordinary procedures which can be performed. I think we spoke about this point, Sanjeev spoke about this point in the technicality part of it. So while this reporting requirement is applicable for FY20, April 23 onwards, for March 23, auditors will carry the standard comment, which is there in the ICA guidance note, that this proviso is not is applicable for the company only from the following year, and the reporting is not applicable. So it's a very standard reporting. We have no reporting responsibility to test audit trail for the year March 2023. Yeah, and coming to, I will not go through the illustration. I'll just take the last couple of slides. These are next steps for companies, right? The company has to take an inventory. So when you're talking to your clients, I think do take them through this concept, because they have to take an inventory of software used by the company, identify processes which are relevant from the financial perspective, identify critical elements in each of the processes for IT logs are required to be maintained, discuss the data requirements with software vendors. I think a company will not be able to do it on its own. They have to go to the service provider if they have a service provider. If it's not a ERP or another system, you have to enable that system. So for outsourced processes, the companies have to go back to their service providers. Also, the company has to discuss the approach for compliance with the board and audit committee. Very, very important, right? Because the company is going to be giving that assurance to the board that they have a policy and they have an appropriate system and process to deal with this requirement. Identify areas where the trail is not possible. Assess reporting implications. So company should be clear that in case there's a qualification coming in the auditor's report, then what happens to their responsibility in the director's report? So the company has to evaluate that as well. And this is a very critical point, because this is a Companies Act requirement. Does the company be in non-compliance with laws and regulations if there's an exception? The answer is yes. However, the one has to understand the degree of the exception, and that will also impact the auditor's main report if there's a no-clar or a non-compliance with laws and regulations. So I think the companies have to address this issue early, because 1st April is already gone by, and they already are currently in the live period for the reporting. Enabling audit trail may not be a simple task for companies. So I think the companies will have to make appropriate efforts, and they have to see if they want to kind of be in compliance with this requirement. Coming to my last slide, and I'll just spend a few minutes on this because this is important to all of us. And I'll just take, I want to go through each point very, very carefully. As auditors, we are required to understand the business, how it operates, but we also now have to see what the interplay of technology and the capability of technology to have any audit trail. We have to go to that second layer and do that understanding very, very well. We have to go through the key processes and understand the risks and controls. So generally, when you do ICFR testing, we do look at manual controls, but do the company have appropriate IT controls or not is the question. I spoke about this earlier. Involving appropriate expert on the audit team, you need to have appropriate audit skills and understanding of the company's software. So involve appropriate experts. If any audit firm does not have the expertise within the firm, you can use external experts as per SA 620. It's important that the auditor should be clear about the requirements relating to the competency of the expert, the objectivity, and very importantly, ensuring ethics, compliance, and independence. So if you don't have the competency within your firm and you're taking help from a chartered accountant who has the CISA, is an IT expert, then you need to ensure that the person who's coming in has the competency to work on that system. He is objective, so he has no other relationship with that particular company, which will make him biased. And last but not the least, that person who's supporting you is independent from the code of ethics perspective. All of this has to be documented in the work profile. As auditors, and we have discussed this with many clients now, of course, this requirement has been getting pushed for the last couple of years. But early planning for this new reporting requirement and communication with the auditee is extremely important. We have not only gone to managements, we also gone to the boards and audit committees where we have the audience and told them about this requirement. So in case you have not done this till now, when you are doing the audits for March 2023, you can do this even now, because as I said, we are in the live period, we are closing March 23 right now. So as you close March 23, please go and talk to the client, to your companies, talk to the audit committees and tell them that this is a requirement for FY 23, 24, but it's important that they have appropriate system to address this. Where the audit trail is ineffective, assess ICFR, we spoke about this, and also identify alternative controls. Planning and timely communication to obtain reports on service providers. So when the company has outsourced a certain process, you need to have appropriate communication to ensure that the service provider gives a SOC 2 report to you to rely on that. And all of this is explained in the ICAI guide. I would urge you to read that. Last but not the least, assessing impact on the NOCLAR and audit report, and timely communication to management and those types of governance for a potential report modification. As auditors, it's our responsibility not to give surprises. It's our responsibility to give the red flags early to the company. So please do this as a part of a March 23 planning, March 23 closing. And when you're planning for 24, try and communicate the issues to the company as early as possible if you see any issues coming up. So this is what I had to cover. And again, I will make this presentation available to Sanjeev and to the ICAI. They will share this presentation with you. And again, in this presentation, I have my email address mentioned. I'll be happy to take any comments or questions now if you have the time, or even later on. Feel free to reach out to me or to Sanjeev, and we'll be happy to respond to you. Sanjeev, I tried to cover this in the time possible, and
absolutely fantastic, Govind. I'll request you to take off the slides, and we have 246 questions, but many of them are repetitive, and more than 4,000 members have joined live.
Okay.
Now, I'll take a few questions that cash withdrawn from bank on 5th of April, wrongly entered on 4th of April, came to notice on 6th of April. So cash was withdrawn on 5th April, entered on 4th of April, and this error came into the notice on 6th of April. How the company can rectify it?
So, Sanjeev, I'd like to go back to what we discussed before I started my presentation. And I want to take your inputs and Chopraji's inputs, which you shared at that point in time. This particular reporting requirement is purely factual. We have to be comfortable that it was not intentional. We have to ensure that the company has appropriate narrations or documentation to say why the correction is being recorded. Mistakes are bound to happen. Even if you're the best system in the world, you will have an issue with data entry. You will have an issue with something or the other. It's a manual intervention, right? We are not robots, right? Even a robot does only limited processing. Input has to be manual first. So I think we cannot shy away from the fact that we'll have errors. As long as the errors are appropriately addressed, appropriately controlled, appropriately documented, appropriately authorized, it should be okay. We should not shy away from that.
Yeah, but the point is that the date of 5th can't be now changed to 4th. If someone modifies the entry, one can pass a rectification entry. But if someone tries to modify the date itself, it means that the audit trail has been disabled.
In fact, Sanjeev, then I would probably respond it a little differently. And I think Chopraji also raised this point. I think we have to also understand what is the system's capability. If a company's system is capable of doing an entry in an earlier date without having a value date concept, I think Chopraji gave a very good example of interest, right? You can have an interest entry coming in. You may revise the interest from 4th, but you may book an entry on 6th with value date of 4th. But the entry still be dated 6th. So I think I will question the company's system, and even the very basic, I'm not going to say any ERP is basic. I think every ERP is good today in my view. Even Tally is very good. Question is how you use it. So every system has a feature of not doing backdating. if there's an entry happening on the 4th, happening on the 6th with the date of 4th, I'll question the system first. And then I'll put the entire system in question. Forget audit trail.
Yeah. No, absolutely right. Yeah. There is one question from Ravi. What is the meaning of daily backup? Does one need to take backup on daily basis and create backup folder for each date?
I think firstly, I'd like to clarify that the daily firstly, we're talking about daily backup and audit trail as management responsibility. So what the company's Act rules state for maintenance of books of accounts. Books of accounts are to be maintained on a daily basis. The backup concept comes in when the company's servers and systems are outside of India. When the company has a system which is outside of India, the Companies Act requires that company to have a local server, and on that local server, the company was required to have backups on a periodic basis. Periodic basis earlier was not clarified. Some companies are doing on an annual basis, some are doing on a quarterly basis. Now in the new Companies Act rules, they have changed it to daily basis. So the company needs to, if the company has a server sitting outside of India, they need to have a process of getting that the backup in India, and the backup should be available on a daily basis.
Right. Thank you. There's a question from Ashish. What about masters? Whether we need to have a trail for masters as well?
So I would like to kind of go back to the example we spoke about relating to the user access. Right, a master is a very important document which is used for initiation of the transaction. So when you have a customer sale happening, you can't do a customer sale being booked on the ERP without having a customer master. So customer master is a very important control. So I think it's a very important, I would say, IT control, but a customer master may not lead to a financial impact. It's the generation of the revenue which leads to a financial impact. So having a control of a customer master may be important from the point of view of having IT general controls, but not audit trail. I think the example is there in the ICA guidance also, which says that you have to look at what impacts books of accounts. Now, so I think the entry which impacts the books of accounts is the sale entry, and not the master.
Now, a question from Sahil. Sahil is asking, should risk control metrics also consider control risk in respect of audit trail metric? Yes, obviously. I mean, they should. They should
obviously
do that.
That should be the first thing a corporate should do. Yeah.
Yes, and many members have asked whether the presentation and recording will be available. 100%. All the programs of ICI are available on the DLH, and the recording is available. Subramania Iyer K. Sir, whether the audit trail should show the quantum of changes made and reasons for the same.
Yeah, so I think it's a very good question, and I think Chopraji alluded to this, but I'll probably elaborate on that. So, what is the concept of recording an accounting entry? The concept of recording an accounting entry is to explain the entry. So when you say, earlier days used to have a narration, being sale booked, being cost booked. So I think when you're recording any accounting entry, there has to be a logical explanation to the entry. Very important is if you're making any modification. I think it's important that, audit trail, the whole concept is what? If you're making any change, then the change has to be appropriately captured. So if you're having a software system which permits you to have a narration, then yes, you should have a narration to explain that. But Chopraji alluded to the fact that not every system may have that feature to kind of have the narration. But again, it will be a good learning curve for the companies to start building that feature in. But there should be discipline also on that. And to that extent, the RCMs we spoke about, risk control matrix, they have to bring out the company's process that they have to have a system of recording and narration when they make any change. That audit trail should be captured.
Now, Sumit is asking a question which I'll respond. What would happen to audit trail or log compliance in case the software is crashed or corrupted and part data is lost, and some of the entries, including cash entries, are made at a later date to ensure completeness of the books of accounts during the process of recovery? My dear friend, for audit trail, I would strongly suggest that let it be left to the company to ensure compliance with it. If it has not been followed, as member, we must report it.
Sanjeev, can I just give us a very practical example? And this has happened in the recent past with cyber attacks happening. Many times the company's data gets encrypted, and there's a ransomware call on the company. I think those are very important cases where we have to see that data loss which you have. How do you address the risk of completeness of the data after the data was restored? So there's an audit procedure around it. But I would go with what Sanjeev is saying. If you have a issue with your cyber attack, then you need to have appropriate backup system anyway. Where's the BCP then? There's business continuity planning. So that actually questions the company's IT strategy then. So I would say that you have to look at the backup available. You have to look at the daily backup happening or not, and you have to go back and check with those controls. But otherwise, I would agree with Sanjeev.
Fundamental issue, fundamental thing which I would like to tell all the members that should look at the form, right? And we should not encourage the bypass routes for the same. There is a question from Mr. Sunil Gogia. Can auditor rely on the system audit conducted by an IT expert? Yes, you can rely. You can rely on the work of an expert, but you remain responsible for your audit report. So finally, there is an auditing standard which says that, and which Govind has talked about, that how you should perform your work in case you're relying the work of an expert. And this is true even for an actuarial valuation report. This is true for a valuation report. So the same principle would apply. Vinay Makkad has the same question of the data corrupt. Now, Jaideep Satish Chandra Tresi has a question. Certain ERP system have the concept of super user access, which permits edits to the log maintained. Accordingly, these can be edited. So whether it should be treated as a sufficient compliance and should not be treated as modifications. Govind, would you like to respond to that?
I would take this entire regulatory change to be more of a landmark or a important pivot to go and talk to the companies on the IT strategy. If they have such kind of logs which permit super users to make edits, they should disable it once and for all. They
Absolutely.
Talk to the service provider and deactivate those systems, and it's a fresh beginning. I would say we should do the right.
Yeah, absolutely. So no such super users.
Yeah.
Mr. Jaideep has one more question. Many times the final audit entries are posted in Excel, and final financial statements are prepared. As the ERP system in use locks the same post the one thing. In such cases, the Excel sheet reconciling the output of the ERP additional journal entries to the final balances are considered in the financial statements or books of accounts. Accordingly, would it be possible to exclude Excel from accounting software? And if so, I've understood the question. So whether we can exempt Excel, even if say final adjustment entries are passed. So to my mind, whatever goes into the financial statement, whatever goes into the books of account, would be covered in the audit trail. So if Excel doesn't have an audit trail, it's a problem of the Excel or of the management. So please, whatever is going into the books of account or into the financial statement need to have an audit trail. Please pass the closing entries in the accounting software. Govind, you want to add anything?
Sanjeev, you answered the question. We discussed this a lot. I think problem is that we leave the last entry in Excel, and there's no reason to do it, because if you look at IT systems, they have a process of rolling forward automatically. All entries should be embedded in the books of accounts, and your trade is already there then. There's no question of Excel then. So Sanjeev, you answered the question.
Yeah. Thank you. I'm just seeing that what are the unique questions. For audit, for the retention that it applies prospectively, yes, 100%. Nobody's asking you to retain the audit trail for previous year, even if you have voluntarily maintained it. It is mandatory from 1/4/2023. Now, there is a question from Mr. T. Maru that can you guide while preparing engagement letter any precaution or any additional clause to be inserted with respect to audit trail? Govind?
So, Sanjeev, I really appreciate the ICI's efforts on this guide which you kind of brought about for the members. You covered all aspects, including management letter. When I look at engagement letter is a contract on the audit process, and it puts the entire responsibility on preparation of financial statements and maintenance of the books of accounts on the company. In my reading, and I'll be guided, or probably I'm willing to be kind of having a different view. My view is the current ELs cover this, because it's just nothing but one more facet to the control system of the company. So it's not something which is a new thing coming about, and we have to keep reminding our clients that this is their responsibility, not necessarily through the engagement letter, but otherwise. So I think if you have appropriate communication with those charges governance or with the management, that should be adequate. We don't have to do everything in the EL.
Absolutely. CS Sudesh Choradia has a question. For outsourced payroll software, if the outsourcing company doesn't provide access to auditor of the company for verifying audit trail, only gives the report, so can the auditor in question rely on the same?
I think, yes, auditor can rely on the same, but the auditor has to then apply the principles of SA 620, where you go into the competency, objectivity, and independence. We are not, after getting a specialist report, we are not required to audit it all over again. We are not required to.
Absolutely, and it's not possible also. See, Kapil Malhotra has a question. This being the first year, maybe a company has started an audit trail from 10th April or after listening to this webinar or others. Is there an exemption for the gap period? Answer is no. It's applicable from 1st April. And this was communicated 2 years ago. So it was deferred for 1 year, again deferred for 1 year. Sorry, if there's a gap, it needs to be reported on. Then this again outsourced. Now, Karthik Srinivasan has a question. What about Tally, which does not have this feature? First of all, I do not agree that Tally doesn't have this feature. Secondly, if it is not available, it's a problem of the management, not of the auditor. An auditor is required to report on this. Ashish has a question. Do auditors needs to modify the report if audit trail is not achieved as per record retention rule in India? So if for 8 years it is not retained, is there a qualification that's required to be given by the auditor? Govind?
So I think if I look at the current requirement on auditors, the answer is yes. My thought process on that is that, and Sanjeev, this is actually a more, because it's a very new concept, it's an evolving topic. If I look at the procedure the auditor has to do, is to understand the company's process to retain this, right? And that process could be tested once in a year, but you can also do it through inquiries. You can also understand how the company's done the backups. So it's not that the auditors is required to go and test the system and open it up every year. That is not the expectation. Expectation is to see the company's process and test the company's process. So I think I would say that yes, you have to test it every year, and if you don't see it, then you have to kind of question that.
So they say that Preeti has a question. If the statutory auditor has reported that accounting system were tampered with, what should a tax auditor do as a part of his responsibility if he is relying on that statutory audit report?
I would first look at the statutory audit report's main report. Is the main report qualified or not? Is the statutory auditor's ICFR
so the main report is qualified. Main report is qualified.
Main report is qualified. ICFR is qualified. Then I would certainly start looking at the tax audit report in a very different light, because if the main report is qualified for tampering of data, then a tax auditor carries the same risk as the statutory auditor. The tax auditor has to carry the same qualification in the books of accounts and then in his tax audit report and qualify accordingly.
Yes. Okay. CS Sanjay Kapoor has a question. If a company maintains its accounts manually, what is the fate of audit trail? Please report that the accounts are being maintained on manually, and it's not possible for auditor to test the audit trail.
Yeah.
Okay, then repetitive. Does the mandatory audit trail apply to LLP? Answer is no, it applies only to companies. Does it apply to small company? Yes, it applies to all companies. Does it apply to Section 8 company? Yes, it applies to Section 8 company. What's the responsibility as an auditor if company does not maintain audit trail? Qualify for audit report.
I think, Sanjeev, to that question, we should be very clear. By saying it's a qualification, it's actually a matter of fact reporting.
Basically.
When you say qualified, generally you think it's an opinion difference. It's not an opinion difference. It's just a matter of fact reporting. You don't have.
Right. Yeah. Right. No, but then in the opinion, whether we'll be writing modified opinion?
No. So the company can still have, they may not have audit trail. So that's the important point I made, right? That you have to also evaluate the impact of audit trail not being maintained on your main report. So will it impact your controls? Do you have alternative procedures to ensure that your ICFR is not impacted? Do you have alternative procedures to ensure that your financial statements are not impacted? If your answer is yes, you'll give a clean opinion. the audit report can be clean if you have done enough work to be comfortable that the audit trail not being there has not impacted your numbers.
So despite the fact that saying that audit trail is not maintained, the opinion can be an unmodified opinion.
That's in my humble opinion, but if there could be a different view, I'll be happy to.
We'll have to evaluate this.
Yeah.
Radhesham Garg, he has a question whether it's possible to maintain the stock records manually and other data on tally with audit trail. Please report it accordingly.
Yeah.
Then what if monthly accounting is done? Sorry, I mean, the books of accounts are to be maintained on a regular basis and a daily backup is to be taken. So the company needs to take remedial steps. Govind, you would like to add anything? Because many people are saying a part-time accountant is there, entries are done only once a month or once a quarter or once a year. So what should the auditor report?
Sanjeev, I personally, again, this is my view, I don't see any concern with that. Because you have to also appreciate reality, right? Our corporates, they may have somebody coming only for the first 4 days of the month and doing the last month's accounts. As long as the dating is appropriate, nobody is putting backdated entries. Put the current date, put the right value date, it should be okay in my view. I don't see any concern.
I also agree. No, their question is when we say that the daily backup is to maintain. So daily backup of the entries which have happened is to be maintained. If the entries have not happened, that's okay.
Absolutely. And daily backup, the issue is more to do with the books of accounts maintenance, not audit trail. I think we should also have a difference in the two.
Yeah. So Harshvardhan Tyagi has a question why we are discussing now from past 2 years. Well, my friend, these requirements were not applicable in last 2 years. So that's why these were not discussed. So Sanjay has a question. What is the solution of opening balance in audit trail? Unless and until we finalize the last year accounts, say for example, 23-24 accounts will be finalized later, or 22-23 accounts may say, for example, they are finalized on 4th May. So when do we enter the opening balances? And these will be entered after 1st of April. So what would happen? Govind, would you like to answer?
I think this is extremely common. None of the companies sign off on 1st of April, right? All audits generally get signed off after the 1st of April. So I think many ERPs, Tally, they have a year-end module. Some people call it period 13. Some people call it year-end module. So year-end module booking entry can happen in the month of April, May, June. It should be dated April, May, June with a valid date of 31st of March. That system should be there.
This value date concept is actually, was very nicely explained and probably answers many questions. Yes. Now, Anurag Agarwal has a question in case of consolidation of financial, where one of the entity is a non-corporate entity. What is the responsibility of the consolidating auditor in respect of that non-corporate entity, which is not required to maintain audit trail? Govind?
It's a very easy answer that it's okay. And we have to report. It's a very easy answer.
Okay. So, Atul Gupta has clarified that the implementation guide does not have this requirement of previous years. It clearly says no need for previous year. Well, if that is, I also thought so, but still we'll have a look at it. And if there is, I think we'll see. Why there's a question from Surya Prakash Agarwal, why government keep the name audit trail? It should be accounting trail. Audit word is misleading. Well, they made an amendment in 11G. That's fine that how it is named.
Yeah, back in 1 minute, Sanjeev. 1 minute.
Yeah, sure. There's a question from Amol that how are we supposed to comment on where certain entries are deleted and it's now visible in edit log? Yes, please report. That's a factual statement. Rashi Jain has a question, can we pass entries at month end? Yes, you can pass on. Hemant Arora, what do when documents received like purchase bill after the issue date? Again, the question, the concept of value date should apply. Um, then Ramani Arvind, there's a question, very small company, they do not have any full-time accountant, how to go about it and how to report. There is no problem. Whenever they're making the entry, they'll make the entry in the current date with value date being different. CA Ankit has a question, what opinion should auditor required to give if a company implemented the system on say 8th of April? Well, I mean, they should report that fact. So Mr. Harshvardhan Tyagi is a question, why ICI is looking for extension? ICI has never asked for extension for audit trail.
Sorry.
Yeah. There was a question that why ICI is looking for extension for 2 years. I responded that ICI has never asked for this extension.
Yeah.
Companies have asked for it, and ICI has stopped asking for extension. Even last time for the tax audit, we didn't ask for extension.
Yeah.
Basically, I'm just scanning through the question that who will regulate IT software producer with that. That's for government to see. How will, see, Ruchir is a question, how will ROC look into the audit trail or edit log and what may be possible consequences? Well, I mean, that's for the ROC to see, I mean, how they look at the auditor's report.
I think, Sanjeev, one of the important aspects on this is that, our members should impress upon the companies that this is actually a corporate law compliance. And if there's any deviation and if there's a report, anything coming in our report will signify a non-compliance on their part. I think the members should clarify that to the corporates.
Absolutely. And is audit trail applicable on opening balances also? Yes, to my mind, audit trail is applicable on opening balances also. If you're talking of 1/4/2023 onwards, 1/4/2023 will include opening balances on.
It'll be rolled forward. It'll be a rollover anyway, mostly.
Yeah. If a company maintains a fixed asset register in Excel, whether such record will form part of books of accounts. I believe, and this is what we have stated also, people can have different opinion, that let us look at the concept of original books of entry and what is going into the financial system. If the fixed asset records are maintained on a standalone basis, depreciation is not going from there, if it is not a part of subsystem, if these are memoranda records, an entry is posted based on those calculations, then in my view, memoranda records you can maintain, they should not be a problem. But yes, if it is a part of the main system, so it is constituting a subsystem, entry is flowing from there, then yes, even that Excel will be included.
Yeah.
So these are the questions. Thank you, Govind. Thank you for taking up such a detailed session, and thanks to Chopraji in absentia. And we'll have many more such sessions coming up. But yes, with 4,000 plus members, and in fact, the logins were more than 6,000. So maybe some members left in between, but finally we had 4,000 plus unstructured CP hours, and still that shows the interest. People have mentioned this bank audit season, still people attending. Yes, because this topic is important and our members are aware of the changes which are happening, and we'll strongly urge our members to remain updated. And for the benefit of our members, we're also coming up with auditing standard checklists, working paper templates, etc. So from the institute side, we'll provide all possible help to our members. But yes, it is it is our job to keep up the audit quality, and I'm sure that the profession will rise to the occasion and make this forward-looking reform a real success. So thank you, Govind. Thank you, Anil Lalji. Thank you to the tech team, and thanks to all the participants for sparing their valuable time. Kindly stay tuned for subsequent programs of the AASP. Thank you.
Thank you. Thank you.